Let's continue our discussion from the previous issue. The investment landscape for quantum computing isn't limited to the pure-play players mentioned above, who are betting everything on the future. Within this ecosystem, there are also larger, more established players, as well as companies that are often misunderstood due to their technological luster. Understanding these players can help us build a more diversified and risk-balanced portfolio. Here, we need to introduce a classic investment framework. In a gold rush, are you digging for gold or selling shovels and jeans? Companies like IonQ and Rigetti, discussed earlier, are digging for gold, betting on their chance to unearth the biggest nugget. Companies like Honeywell, on the other hand, are more like the ultimate shovel supplier. Honeywell is a diversified industrial giant with tens of billions of dollars in annual revenue, operating across a wide range of sectors, including aerospace, building automation, and high-performance materials. Its presence in quantum computing is achieved through its majority-owned subsidiary, Quantinuum. Quantinuum is a behemoth formed through the merger of Honeywell Quantum Solutions and Cambridge Quantum, a leading UK quantum software company. Quantinuum's strength lies in its combination of cutting-edge hardware and software. It inherits Honeywell's extensive expertise in trapped ion hardware, and its H-series quantum computers have consistently led the world in fidelity and performance. Furthermore, it leverages Cambridge Quantum's cutting-edge software capabilities in quantum algorithms, operating systems, TKET, and quantum network security. This full-stack capability makes it an extremely formidable competitor. In June 2024, Quantinuum released the H2-1, the industry's first 56-qubit trapped ion quantum computer, and, in collaboration with Microsoft, achieved a key milestone in fault-tolerant quantum computing on it, demonstrating its technological prowess. Honeywell itself is a highly profitable blue-chip company. Quantinuum, as an independently operated but majority-owned company by Honeywell, also possesses strong financing capabilities. In early 2024, it completed a $300 million funding round led by JP Morgan Chase, valuing the company at $5 billion, with plans for a future IPO. Investing in Honeywell HON is currently the most conservative and robust way to enter the quantum computing field. You gain exposure to a top quantum computing player, Quantinuum, protected by Honeywell's large and profitable legacy business. Even if Quantinuum underperforms expectations, it won't devastate Honeywell's overall stock price. Of course, this safety comes at the cost of diluted upside. A tenfold increase in Quantinuum's value doesn't directly translate into a tenfold increase in Honeywell's stock price. It's a risk-reward trade-off. In previous sections, we've explored the pioneers working to build quantum computers themselves, from IonQ's trapped ion technology to Rigetti's superconducting technology. But in any technological gold rush, the true and most enduring wealth often doesn't accrue solely to those who strike gold. Equally profitable, or even more so, are those selling shovels, jeans, and providing security services on the roadside. The same is true of the quantum computing revolution. It is spawning a vast and complex ecosystem. Within this ecosystem, two types of companies play crucial roles. These companies don't directly build general-purpose quantum computers, but their success or failure is inextricably linked to the progress of the quantum revolution. They are quantum blacksmiths. These companies provide the most essential, sophisticated tools and equipment for all those gold diggers. They are the enablers of this revolution. And there are fortress builders. These companies focus not on what quantum computers can do, but on the enormous threats they will pose once they emerge. They are building fortresses to defend our existing digital world from quantum attacks. Today, we'll take a closer look at two key players in this ecosystem: FormFactor, ticker FORM, and SEALSQ Corporation, ticker LAES. Understanding their business models is a crucial step in shifting from a gambler mindset to a strategist one. FormFactor form the blacksmith, forging the precise gauges for quantum engines. First, let's be clear, FormFactor does not manufacture quantum computers. Investing in it isn't a bet on a particular quantum technology approach to success. Rather, it's a bet that the competition itself will continue and intensify. FormFactor is the company that sells the best shovels and pickaxes to all competitors. FormFactor is a leading supplier of semiconductor test and measurement technology. Its primary business is providing chipmakers with wafer probe cards, highly precise equipment used to test the electrical performance of chips while they're still on the wafer to ensure quality. What does this have to do with quantum computing? A huge deal. As we've discussed before, both Rigetti's superconducting qubits and other cutting-edge technologies require ultra-low temperatures, nearing absolute zero. Accurately testing and measuring quantum chips under such extreme conditions presents a significant technical challenge. This is where FormFactor comes in. It offers a range of cryogenic test and measurement solutions, including cryogenic probing systems and dilution refrigerators designed specifically for quantum engineers. Simply put, when scientists at IonQ or Rigetti develop a new quantum chip prototype, they need FormFactor's equipment to verify that the chip actually works. FormFactor's competitive advantage lies in its decades of expertise in precision testing. It's not a startup, but an established, well-respected supplier to the semiconductor industry. It recently partnered with Delft Circuits, an innovator in quantum wiring solutions, to jointly develop high-density cryogenic interfaces, further solidifying its leadership in quantum testing. It is becoming an indispensable infrastructure provider for quantum R&D. This is the fundamental difference between FormFactor and pure quantum players. It is a stable and profitable company. In the second quarter of 2025, the company's revenue reached $195.8 million. Its valuation is based on its solid business in the traditional semiconductor market, not a distant quantum dream. Investing in FormFactor provides an extremely high margin of safety. Its foundation is the vast semiconductor industry, and its quantum computing business represents its future growth option. This means that even if the commercialization of quantum computing is much slower than expected, FormFactor's core business remains solid. However, if quantum computing R&D accelerates, demand for high-end cryogenic testing equipment will explode, directly benefiting FormFactor. From a risk perspective, the risk lies not in the quantum field, but in the cyclical fluctuations of the semiconductor industry, its core business. However, compared to the startups previously analyzed, whose survival hinges entirely on a single technological breakthrough, this is undoubtedly a more stable path. Now, let's look at another company, SEALSQ, ticker symbol LAES. This company perfectly exemplifies the concept of thematic drift and the opportunities it presents for savvy investors. SEALSQ also doesn't manufacture quantum computers, but its entire business model is built on the premise that quantum computers are inevitable. SEALSQ is a semiconductor and cybersecurity company focused on post-quantum cryptography, PQC. What does this mean? All of our cybersecurity today, from online banking to military communications, is based on difficult mathematical problems such as factoring large numbers. Our current classical computers would take millions of years to crack these problems, keeping our data secure. But a sufficiently powerful quantum computer, using the Shor algorithm we mentioned earlier, could potentially crack them in minutes. This is a quantum apocalypse scenario that could disrupt the world's digital infrastructure. SEALSQ's mission is to provide the world with a new digital shield capable of defending against quantum computer attacks before this apocalypse arrives. It develops and sells security chips and microcontrollers that integrate the latest PQC cryptographic algorithms approved by the U.S. National Institute of Standards and Technology, NIST. SEALSQ's competitive advantage lies in its expertise in security chips and public key infrastructure, PKI, as well as its forward-thinking approach to PQC standards. It recently completed the acquisition of ICALPS, a French ASIC, application-specific integrated circuit design company, significantly enhancing its ability to provide customized security chips for industries such as automotive, medical, IoT, and defense. Its goal is to become Europe's leading supplier of sovereign quantum-safe chips. SEALSQ is a company in a period of rapid growth, and its financial statements reflect this. It recorded a net loss of $10.8 million in the first half of 2024. It raised $60 million through a share offering to invest in the research and development of next-generation PQC semiconductors. This is a company that requires continued investment to seize future markets. Investing in SALSQ is not a bet on the creativity of quantum computing, but rather its disruptive power. This is a unique, even countercyclical investment strategy. The faster quantum computing progresses, the more urgent the demand for SALSQ's products. The U.S. government has already mandated that federal agencies begin migrating to PQC, setting the tone for the entire market. The risks lie in timing and competition. While the quantum threat is real, the large-scale market replacement cycle may be longer than expected. Furthermore, competition is fierce, with numerous cybersecurity and semiconductor giants competing fiercely. SALSQ's stock price has also experienced a roller coaster ride, from near delisting to a 2,000% surge, demonstrating its high speculative potential. Its safety margin is clearly lower than that of established companies like FormFactor, but higher than that of pure-play quantum hardware startups, as demand is certain and the market is vast. We've just explored two crucial players in the quantum ecosystem. FormFactor embodies the wisdom of an enabler, not directly participating in the game, but providing services to all players, ensuring guaranteed profits. SALSQ embodies the foresight of a defender, anticipating the secondary risks of technological revolution and proactively developing solutions. These two companies offer a fresh perspective on quantum computing investments. It's no longer a black and white gamble, but a vast battlefield where multi-layered and multidimensional strategic planning can be implemented based on varying risk appetites. In this final section, we will integrate all of this information, from pure pioneers to industrial giants to ecosystem enablers and defenders, to create a definitive, actionable quantum investment navigation map. Okay, that's all for now. We'll continue next time.